I'm Barda Perez, and today I'm going to be teaching you guys the basics of income statement ratios. So without further ado, let's get started. Uh, why should we learn ratios? They help investors understand easily how the company is growing or shrinking, and this can be an overall uh, look of the company or looking at their sales, their debt, or their income. It's easier to read percentages than large numbers and try to estimate if it grew by this much or shrunk by that much. So it makes it a lot easier and helpful to understand these ratios. So the first one we have is the operating expenses. This is not a ratio. This is just something to get us a ratio. So basically, operating expenses is all the expenses that it takes to run the company. So, all the people you have to pay, the rent you have to pay, the research for your product that you need to pay, all of that. And basically, here I have an Apple model. I already filled in some of it, not the ratios. And here's our operating expenses. So, what is operating expenses? Uh, we have research and development and selling, general, and administration. Those are both expenses of Apple. And so we're going to add those up together. That should give us operating expenses. So let's highlight that. Next we have operating profit, and basically what it is, it's what's left after paying all expenses. So that it is it's gross profit minus your operating expenses. So Apple had $19 billion, and after their expenses, they're left with about $14 billion. Next, we have our gross margin, which is the difference between revenue and all operating expenses as a percentage, and it's gross profit over revenue. Gross profit over revenue. So it's 39.40%. Okay. Now that's a lot easier than trying to just estimate, hey, Apple went from 50K to this. Okay, you just know that uh, that their cost of goods sold took up a large chunk of their revenue. Okay. Next, we have an operating margin, and it's basically what's left after paying off operating expenses. Most businesses have 10 to 15% margins, and the formula is operating profit over revenue. So let's see Apple's operating profit over revenue. So it's about 27, about 30%. So Apple has a pretty big margin. Okay, that's almost double, maybe triple than most businesses. So that's they have very good margins. Apple does, and it makes sense. They're a big company, right? Next, we have net margin. What is net margin? It's how much the company keeps for each dollar made. So the formula is net income over revenue. So we have net income. Net income over revenue. Oops, I have a mistake here. I'm gonna have to type that out. 10,000. I'm gonna write it here because I have a glitch or something. Anyways, it's this over revenue. All right, net income over revenue. So basically, for every dollar you give Apple, Apple keeps about 20% of the dollar that you give them. And a lot of people don't know that. A lot of people think Apple must be, probably cost them like $2 to make an iPod. Like, hell no. Okay, this is some serious business, and Apple does do a lot to keep 20 cents of every dollar they sell. And you can also use this formula. So say an Apple, a iPod costs 200 bucks, you can actually figure out how much they profit per iPod sold. And that's another video, but it's an idea of what you can do with these ratios. Next we have tax rates. How much are the companies taxed? Well, in the United States, President Obama has enforced a 25% fixed rate of tax, and there's some cases where it changes, but let's see if this is right. See if we're doing this right. Oops, I forgot to write the tax formula. But anyways, it's net income. Actually, it's taxes over pre-tax income over this. No, wrong way. Sorry. It's this over pre-tax income. Okay, maybe I have that a little flipped over. It's taxes over pre-tax. Okay, sorry about that. Taxes over pre-tax income. And yeah, it is. It's about 25%, 25.6% Apple got taxed in Q1 2016. And so yeah, that's right. United States charges 25%, and a lot of Bernie supporters maybe might think it's a little too low for these large corporations, but you also have to keep in mind that there's a lot of small businesses that are running businesses as well. So, it's a big topic, but it's 25% here in the US. You can also figure that out in other countries. If you're out there in the foreign land, you can use that to see how much your government is ripping you off, how much they're helping you out, and so on. So next we have average trading price. What is it? Did I even write that down? Yeah, there it is. It's basically how the price was trading on average during the quarter. So what I mean by average basically means what the price was at the most during those 3 months. It's I can't do it here because I'm gonna have to pull out a graph and find out all those numbers. But basically, you find out the 3 days it ended of the 3 months, and you divide it by 3. So Apple was trading about $102 in 2016, Q1. So for January, February, March, we're all trading at around $102. So with these financials here, it was trading at $102. So it's a good way to market cap the value of a company with their financials. So if we compare it to Q2, where all their stuff actually dropped big time. See, they went from 50,000 to 42,000, 30,000 to 26,000. Gross profits went down 3,000. You see, their average trading price dropped because people noticed that their financials dropped, so the value of the equity went down. I'm not saying it's right. An investor might say there's more potential or the market's wrong, and the market's, some people say the market's always right, but that's not always true. Okay. Next we have revenue year to year. What is it? It will basically tell you how much revenue increased or decreased as a percentage. So basically the formula is new divided by old minus 1. So let's do this right here. So let's do 2016 Q1 over the old one, 2015 Q1 minus 1. Bam. Apple's revenue decreased about 12.8% compared to 2016 Q1 compared to 2015 Q1. And these ratios will give you a better understanding how the company's running. So I really hope this helped you guys out. Definitely a must when you're valuing income statements. So hopefully this helped out. If you guys like more videos on this, definitely do have some more margins for balance sheets and cash flows and some other stuff. But I hope this helped you guys out, and like and subscribe. Thank you.